Let's welcome in our Sreesankar, Head Institutional Equities at Prabhudas Lilladher. He's joining us from Mumbai. Thanks so much for being with us, Sreesankar. Today the biggest spoil sport is Bank of Baroda, down more than 6.5%. State Bank of India has also moved lower. We've got earnings coming in from both these PSU majors. What would you do with PSU banks now? Would you look to accumulate any of them?
We continue to have an accumulate rating on Bank of Baroda, and we also have a buy rating on State Bank of India is one of our top picks. But if you look at the results, there are two things which we need to bear in mind in this quarter, the banking results per se. Post demonetization, the credit growth in the banking system has slowed down quite considerably. While the entire system had a growth of 10%, the system growth by December had dropped from 10% in September down to 4% by December. So I think a lower credit growth coupled with increased deposit growth obviously has put pressure on NII. And that's across the banks and the private public sector banking space that you have seen. But specifically in Bank of Baroda, I think a lot of expectations were that the worst is behind them in terms of slippages into NPA, which is probably around the 2,000 odd crores numbers for last couple of quarters. But the current quarter, the quarter ending December, that has jumped to around 4,100 odd, which is a bit of a surprise beyond what the market was anticipating and what we were anticipating. So obviously there is some pressure in a stock like Bank of Baroda from those kind of slippages, and it brings to a question whether everything is behind us, or are we likely to see slippages going forward as well. And that's the reason why let's not forget also the stock has run up quite handsomely, and so a bit of a correction is bound to be there.
Right, but what would you do? Would you consider PSU banks for accumulation at all, or do you think they're not out of the woods? Caution is advised?
See, when you look into the banking system sector per se, the key question is what is the time horizon that you are looking for your investment? Is it going to be for the next 3 months, or is it not going to be 6 months, or are you looking for the next 2 to 3 years? So if I'm looking for the next 2 to 3 years kind of an investment, definitely I would look at these banks for an investment horizon, because I think next couple of quarters also we will see the pressure of slippages and provisioning continuing to remain high, because as we do not see much of a resolution happening in many of these accounts, whether it is S4A, 525, etc., you're bound to see some pressure coming on in the near term in these stocks. And if you see some resolutions also come up, in many cases there has to be a haircut taken by the banks, which means that provisioning will continue to remain pretty high, and that will keep your ROEs and ROAs, both return on equity and return on assets, subdued. So if my horizon is probably not the next 6 to 12 months, but beyond that, then post that I expect to see all these ratios turning out to be better, because your provision coverage ratios will also go up, because all these banks have been increasing the PCR. And Bank of Baroda especially has gone to around 65% or so, which is probably the highest in the banking system itself. And so which is a positive. So I think we need to give them a much more longer term horizon. Now from the near term, I think pressure will continue to be there.
All right, you see near-term pressure for PSU banks. What about the other financials, private sector banks or even NBFCs? Do you think the outlook for them is clearer, better? How would you approach them?
I think from a perspective of the PSU banks, I mentioned about, I think what I mentioned about Bank of Baroda is applicable across to all the PSU banks, and our best bet in the PSU bank space still continue to remain SBI. SBI as a precursor to their associate bank merger. If you look at the associate bank space, you have been continuing to see a large amount of provisioning, write-offs, and everything that is there. So I think going forward from next fiscal onwards, things will start to be better. But SBI itself has guided, saying that the next couple of quarters and the current year fiscal FY17, you could see 40,000 crores of slippages and on track to do it, etc. So I don't think that there is going to be much of a surprise. We also look at SBI from a better longer-term point of view. Now comes to the question of other private sector banks. HDFC Bank remains in a relatively better space. Kotak Mahindra Bank, HDFC Bank, etc. will continue to, and IndusInd Bank, and Yes Bank has also not seen the large slippage. So I think these banks continue to remain in a different league, where Axis as well as ICICI Bank continue to see the problems connected with the slippages from the watch list. So I think once that watch list is over, the slippages from the watch list is over, probably that also becomes into a good investment horizon. Now coming to the NBFC space, yes, companies like, whether L&T Finance, I think they have addressed their issues in the wholesale business, which we have been seeing what kind of pressure, and they have been writing off. They have clearly have a chosen verticals from the earlier all over the place. They have concentrated verticals where they are growing, and that's much better. And they have also expect to bring back the capital which is sunk in some of the businesses which they are running down or planning to sell off. And I think once that happens, it will be much more positive. Then again, from the pace of Capital First, etc., we continue to remain bullish. On the others, Shriram Transport Finance, be it in terms of Shriram Transport Finance, Mahindra Finance, etc., it's again a question of how the entire scenario turns out to be better, or even for that matter, Cholamandalam Finance, etc. We continue to like that NBFC space, but on the whether everything is behind this the demonetization demands are over for some of these stocks, I think that's a big call. Again, one needs to take that probably this is over and things are looking better. So we like that space also, NBFC space.
Right. The markets have moved up pretty well over the last few weeks post the last expiry. Now, what do you do? Do you think there are stocks that still offer value that can be bought at this point in time? Or would you wait for a correction? Do you think the correction could come? Because we are seeing very small range for the markets, they're not really falling.
I'm a person who believes that when the markets are probably at an all-time high, I mean, when I say all-time high, it's around 8,800 to 9,000 levels. It's an all-time high levels for Nifty. You don't find value. It's not value play. It's again a growth play. And that's where one needs to look at it. I don't think that you're going to find some deep value at these kind of index levels. So everyone is looking at growth, especially in the banking space, and not on value.
Sri, what do you make of the FII flows and the DII flows? Do you think that is keeping the markets higher? Plus, good news like Q3 numbers not being as bad as they were expected to be?
For both your queries, answer is yes. I think the strong numbers, whenever we had FII sales, domestics were continuous buyers, and domestics buying took off the sheen of the selling by FIIs, and incremental inflow that has come in has kept the market up, that's for sure. And then the second part, post demonetization, everyone, including myself, had thought about probably you will see a lot of earnings getting impacted big time. That hasn't happened. And even in the FMCG segment, except for somebody like Asian Paints coming and saying about volume degrowth to that extent, most of the other segments have seen a relatively better performance. But I think the whole scenario is people had downgraded earnings post demonetization for quarter Q3, and the result so far has been relatively better than that earnings expected from most analysts, and that's also keeping the market buoyant.
Right. In terms of earnings for FY18, do you think markets are now optimistic about the growth over there after one-time impact of demonetization?
I think the market is optimistic about it right now, but my own personal view is that one needs to wait till the Q4 FY17 results to come in and listen to the commentary before jumping into FY18. Because my gut feel is that probably We have not seen the worst of FY17. The demonetization impact, as some companies are feeling that probably that might have slipped over to Q4. So it would be worthwhile watching for the Q4 also before jumping into the FY18 numbers. The reason is, if that problem still continues, what we will see is after the FY17 results comes in, Q4 FY17 results comes in, a slew of earnings downgrades for FY18, which one needs to be careful of. At that point of time, that market may not look very much attractive, because if the earnings for FY18 are going to be downgraded, then you're going to have an issue. That's something which one needs to watch out for.